Hello guys, and welcome to today's video. It's me, Ben Kennedy, and I'm here joined with Gareth Solloway, who is the Chief Market Strategist over at In the Money Stocks.
Hi there. How are you, Ben?
I'm doing very good, thank you. The markets have been good to us in a certain way, haven't they? I think a bit of money has shifted. How have you been this week?
Good, good. I mean, it's been a quiet in the equity markets overall, but there's been action in those meme stocks like crazy. It's unbelievable to watch, really, for sure.
Yeah, it is. It's. I feel like with all of the recent money that's really kind of flooded into the market that we saw over maybe the past year, a lot of it kind of went straight into the meme coins, and they were very popular. I mean, for good reason as well. The returns were pretty crazy, as I'm sure you know. But it's kind of begun to slow down. I did see recently that Google searches hit an all-time high, and then as Bitcoin began to for Bitcoin, I should say, but as Bitcoin's price began to decline, so did then the searches. Do you think some of the money is coming out of the crypto market, or you know, what firstly has kind of kept the market down on its feet?
Yeah, so I think especially in the crypto market, the money has kind of pulled out a little bit, especially the weaker hands that were kind of shocked by that drop from the 65,000 high on Bitcoin back to about 30,000. So that money probably is partially fueling the meme stock rally here. And I think that's such a fascinating thing to show how money rotates from market to market. I mean, it's not just going from Apple stock to Google. It's really going from the crypto market into these meme stocks and propelling them higher. So it's fascinating to watch the rotation of capital going on.
Yeah, because it's only really been up until the past maybe year or so that you hear about money moving in and out of different markets, from like the bond market to the stock market, depending on inflation rates and things like this. But I feel like this is kind of very unprecedented in terms of the timing in history.
Yeah, it is. It is for sure. And it definitely coincides and has a lot to do with the fact that so many new investors join the market. So, I mean, you hear about, all these brokers in the US, especially gaining millions and millions of accounts. I mean, it must be like 50 million accounts combined with all those brokers. I'm sure in Europe, it's equally the same. When people were stuck at home, they wanted to trade, they wanted to invest, and it got them interested in the stock market, especially with the upside that we saw from the lows of COVID to where we are now.
Yeah, so with some of the meme stocks that we are seeing pumping, I know that you've done a small bit of analysis on things like AMC, for example. I want you to, that's been primarily the largest one as of today. It's up currently around 95, 96%. Can you walk us through your analysis on this? How did you come up to, how have you done your analysis on both the technical and also on a fundamental side? And, how can somebody actually use this momentum?
Yeah, so let me show my screen here so we can take a look at AMC because it is a remarkable story. When you see AMC going back to early 2021, that's when the initial meme stock craze was going on, and AMC ran from about $2 all the way up to about $20, which in and of itself is a massive move. And then you see this other move we just had dwarf that move by amazing amounts. Now, what's interesting here is that this move actually has what we call a time count, which is a technical term for the amount of days up that a stock will usually go. So if you look 1, 2, 3, 4, 5, 6, 7, into the technical analysis world, you look for generally moves of something like 7 to give you some sort of potential reversal. So my guess is, and again, you just don't know with these meme stocks because of the crazy money flowing in, but you could see some sort of pullback today. Believe it or not, pre-market, AMC was up near $75 to $78 a share. It's now back to 60 to 61. It was as low as 56. So, I mean, this thing is trading in crazy $10 increments here in the US. Now, one thing to note here, and this is just some fundamental analysis of why I can't chase these meme stocks. I'm a very pure technical trader. And what I want to show you here is something very interesting. So if you go to your weekly on AMC and you go back here, you could see in 2015, it was trading around $35. And then same thing in 2016, 17, $35 a share. So you say, okay, well, it's only at $60 right now. How much more? That's not that much more upside than it was in 2015 and 16. But what you have to recognize, and this is my major issue why investors should be careful at these levels is that when it was trading at $35 a share in 2015, there were only 100 million shares outstanding in the company. Currently, there are just shy of 500 million. So really, you have to multiply this high of 35 by 5 times here, the current price. So that gives you an approximate price of $300 a share on AMC that is currently trading if you put it in terms of the shares outstanding in 2015. So it's very expensive. I mean, if we saw AMC at $300 right now, we would probably all be like, holy cow, that's nuts. I mean, we're even saying that around $60 here. But again, you have to put it in that perspective, how many shares they have sold to the public. It's been remarkable.
That is actually a very interesting point there. Considering how many different shares. So explain that in a little bit more detail, because I think that's something that quite often people don't necessarily consider. People just generally tend to look at the simple facts of market cap and what is just the general price. Explain what difference that means in terms of having more shares in the market.
So it basically represents the amount of shares that the company has sold. So we know that during COVID, they basically went bankrupt multiple times. The way they avoided bankruptcy was to issue just tons and tons of shares to raise capital to keep that company going, to pay their employees, to pay the rent on their movie theaters and so forth. And that basically has increased the amount of shares that are available in the company. All right. So what you want to be aware of with any stock is that if a stock is issuing a lot of new shares, they're diluting the current shareholders tremendously. And in this case, by about 5-1 at this point, you've been diluted. So if you held the stock from, that 2015 period, you were one of 100 million shares, or, if you own 100 shares out of 100 million, you're now, if you hold that same amount, you have 500 million shares in the company. And that's a major dilutive issue and puts the market cap much, much higher than it was in that 2015 period. It's
unbelievable. I mean, have there been any other companies that you're aware of that have been doing something similar to this? We all know that a lot of stocks have been pumping. The question is as to why, especially during COVID and things like this. Are these tactics used by other companies, or is it purely just the fact that the stimulus checks are there that's why companies have been pumping?
Yeah, so definitely there's been many companies that have issued shares to pick up money to run their companies over the last year or two. That's mostly due to the fact that the Federal Reserve has put it in the markets in such a euphoric state that investors investors are flush with money, like you're saying. The stimulus checks, the unemployment benefits, all that type of stuff is just adding to this appetite for investors to say, okay, I just want to put money in the market because I have extra money right now and I want it to grow. And it's almost like a snowball rolling down the hill, where the more people that do it, the more the stock goes up. The more the stock goes up, the more these companies issue more debt or at least issue more shares to raise capital. So it's a remarkable thing going on. It is a sign of a general market top. You don't know if it's today or next week or next year, but those type of signals were the same type of things that were going on in the late 90s and the early 2007 period.
That's it's a very interesting comparison there. Quite a scary one where you bring in the late 90s and 2007 period. And so we've obviously seen a lot of money move from the crypto market into the stock market, as you've mentioned, and perhaps other markets. I know gold has done, kind of rallied in the recent months. Are there any other, should we call them meme stocks, that have rallied? And where is it, or that potential new money is going now that they've been scared away from the crypto market?
Yeah, so I think all the meme stocks that used to be hot, they're getting hot again. For instance, BlackBerry here, and let me flip back to my daily chart on this, and just so we can get a more intra or daily chart move. But you can see the same thing in early 2021. You had this monstrous move up to about 28, and you could see that the same time as AMC caught a bid, we're seeing BlackBerry run as well. In fact, BlackBerry seems to be the favorite today, up about 28%. And I think it's important to note that AMC actually came out today And again, pre-market, that stock, I think I saw it trading as high as $78 a share on AMC. And again, putting it in perspective, it's around 62 right now. But the company actually came out and said, there is no reason why our stock should be hovering where it is or trading where it is. If you're an investor, you should expect to potentially lose everything. And I thought that was a very dramatic statement from a company. You know, it's one thing to say you could have a big loss, but you know, basically they're saying that their business has fundamentally changed, and that, you know, yes, they have the cash to survive another 2 or 3 years now, but it may not guarantee them survival forever. And investors, basically, they're warning investors that if you're going to pay $60 or $70 a share, be aware that it should be money you're willing to lose. In terms of other meme stocks, I mean, all these meme stocks are going because the Reddit crowd is kind of remembering what ran last time. KOS was a big runner back here. You can see it popped yesterday, although it is dropping today. And there's a few others as well. We know about GameStop. Although GameStop did move up, it certainly isn't having the type of massive move that it did in the past.
And I want to ask a little bit more about GameStop, because like you said there, AMC have come out publicly and said, you know, guys, this fundamentally, there hasn't been as much of a change as what's been represented in the share price. And now when you have a look at someone like GameStop, you know, they haven't come out and said this, but they have tried, I feel, to perhaps embrace some of the momentum. I believe they said that they were producing an NFT platform. So they were going to try and, I guess, almost move with the times, and perhaps with the crowd who are speaking about them, perhaps even believing in them on a fundamental basis. Have you been aware of that and their moves to try and create something around the NFT space?
Yeah, absolutely. So I think that's what these companies have to do. They have to figure out a way to reinvent themselves to justify the valuation, right? So they know their valuation is being held up right now. I think they're smart enough to know that it won't be held up forever unless they change their business model. So GameStop trying to move towards that NFT side is definitely the smart thing to do. The question is, can they do it successfully? You know, if they raise enough capital, they can possibly reinvent themselves. But, you know, just like AMC, GameStop is something, you know, where, you know, video games are being delivered online now. I mean, nothing's really go in the store and buy it physically anymore. The same thing with AMC. I mean, I know we have a reopening trade with going back to the movie theater, but you know, these days, streaming platforms release movies almost immediately. I mean, it's just a totally different thing. And I was even thinking about myself, like, you know, even post-COVID, do I want to really go sit in a crowded movie theater and someone sneezes behind me? And am I going to be like, oh, yippee, you know, even if it's not COVID, do I want to deal with that when I have an 80-inch TV at home with reclining movie theater chairs and I can make my own popcorn? I don't know. You know, so it's one of those interesting thought processes. Is the movie theater business totally changing for the future?
Yeah, that is interesting, and I agree. A lot of companies do have to now fundamentally change, and you know we have seen, I mean, even larger scale companies, you know, not just the meme stocks, but the people like Zoom, for example, doing very, very well off the back of the pandemic. And so moving slightly further into more of the established, should we say, larger cap financial stocks. Where are you currently looking at the moment, and what's your general market outlook for some of the slightly more investable and less risky stocks that are coming out?
So I would say that in general, and I'll pop up my screens here. So overall, the market, if you're looking at the indices like the spiders, the S&P, the NASDAQ, and so forth, I'm net short the market right now. We're looking at this kind of beautiful wedge pattern here that the market has been stuck inside of. And this wedge pattern goes all the way back. The low line goes all the way back to the March 2020 lows of that COVID panic. And you can see here, you hit it low, you kind of kissed it here, you hit it again, hit it again, hit it again, hit it again. I'm going on the assumption that at some point we are going to break down below this line. And when that happens, that is going to be an absolutely nasty sell-off in the market. So you can go, you know, we can talk about this in a couple of weeks again if it happens, but my guess is over the next couple of weeks, you'll see this line break and the markets start to get a bigger downturn. Now, that's not to say there aren't a few stocks that I'm long, I still like a certain amount of the Chinese, the Shanghai composite stocks, TME, Tencent Music, stocks that basically got crushed during that Archegos Capital collapse. A lot of those names have already been discounted to the point where I feel comfortable inching in. And again, I dip a toe in the water, dip another toe, kind of buying as they come down. But overall, the markets are definitely struggling here. If we look at the QQQ, which is down pretty sharply pre-market as well, one of the things you can see is a potential head and shoulders starting to form. Shoulder, head, and then again, if we curl over here, you get a beautiful head and shoulder neckline right here. And if this breaks, you get a significant move all the way down on the Qs to about the 275 marker. So there's a lot of these bearish kind of setups in the indices that I'm very nervous about over the next few weeks. If you think about it, the Fed, obviously, there's a reason there. The Fed is going to start to tighten. They even talked about walking back their bond buying program and starting to sell those bonds that they bought because of COVID yesterday. Those type of things, tightening monetary supply should bring stock valuations in, especially if interest rates start to move up a little bit more. So I think that's definitely one of the ways you want to look. Be careful in the markets right now. Something is brewing here, according to a lot of signals I'm seeing.
Yeah, and to be honest, it's a very, very good point you make there. And even when you have a look at some of the charts of the indices, they do look fairly similar to, to draw a comparison to the crypto market, fairly similar to the Bitcoin chart that we saw, where the momentum began to slow, and you then begin to see just, not as much upward pressure when there is, and that you get a little bit of a sideways movement before obviously the big drop.
Yeah, and the sideways movement, just to be clear, what's going on there when a stock or a market goes sideways, especially near highs, is that you have institutions. So we know that the retail investor has been piling $50 billion, $40 billion into ETFs and into the market almost every single week for the past few months, maybe even since late last year. And when you don't get upside because of that, the reason you're not getting upside is because institutions are selling that. They're meeting that buying pressure with equal selling pressure, which causes this sideways action. So and anytime I see institutions unloading, it always makes me very, very nervous. So I think that's definitely a great point that you're making. And I want to show you guys, I know a lot of people are all interested in Bitcoin. So let's look at the Bitcoin chart really quickly, because you were just mentioning the similarities here. So you can see that same sort of thing where you had a shoulder here, a head right here, and a shoulder, and your neckline was right here, right? So shoulder, head, shoulder, and then when it broke, look at the flush you got. You got a break at 50,000, and you went straight to 30,000. Now, I don't expect that type of collapse on the market of that magnitude percentage-wise, but it is something you want to be aware of, is that same pattern is forming. Another really interesting point is that in 2017, when cryptocurrency topped, the stock market topped about 4 to 6 weeks later, and then started to come in as well. And if you look at when Bitcoin topped, it's now been about 6 weeks later as well on the stock market. So, again, I would say that look for the indices to trade lower. That's my angle. I do think there are certain stocks out there that are good value that you can kind of hide in. But again, look for cheaper buys on a lot of stocks out there.
Okay, and I just want to get your opinion as we begin to wrap up on the NASDAQ and some of the tech stocks. They have had quite a hard couple of weeks, to be honest. There's been some momentum in some areas, but on the whole, they haven't really, been pumping as hard as they had. Has their slowdown begun to already materialize? Do you expect a further downside alongside the other indices, or have they kind of already had their correction?
So let's just take a look at Apple here, and Apple's a great representation of the big cap tech here. And one of the things that I've been following really closely on this Apple chart is that, so you have a high here, you made a higher high, and you have a lower high. And more importantly, there's a trend line that if you connect, and this is why I love trend line analysis, because it's just so cool how these things align. But look at this trend line here, how many hits on this line you've made over and over and over again. And what I would say on Apple is that if Apple breaks below this line, you're going to get a move down probably all the way close to $95 a share on Apple. And right now it's trading at 125. So, I mean, that's a lot of downside. But this is a very easy chart for those of you watching this video to follow, because it's very defined. You can all draw this trend line on your charts. if Apple gets below and stays below, look for that bigger momentum sell-off to take hold, as this is a major trend line of support that would be broken. So certainly you haven't on Apple broken yet, but if you don't, if you do, watch out below for sure. And my guess is it kind of all coordinates with the market breaking down as well.
Yeah, absolutely. Yeah, very, very valid point. So where is it that apart from some of the, let's say the Asian stocks, for yourself this week, what is the final piece of advice that you're going to impart upon us and everybody in the community? What can you do to perhaps guide us and give us some ideas as to what you're going to be doing this week, or I should say the following week?
Week, yeah. So for me, I'm basically, so I picked up, like I mentioned, a couple of small, and I stress small, like we're talking 1% of my portfolio in a couple different Chinese stocks, just to kind of dip the toe in the water, because anytime you buy into a potential correction, there's still risk of downside. Even if they outperform afterwards or during, they're still probably going to go down if the markets drop 5 or 10%. I do think other stocks that are trading at cheap valuations, I think I've mentioned Viacom before. I love a company like that, because not only is it trading at a forward PE of 9 with a 2.5% dividend, but you also have the consolidation where Amazon recently bought MGM for $8.5 billion. We know that Discovery is merging with HBO Max. So there's this consolidation, which to me says, okay, maybe I'll wake up one morning and there'll be a buyer for Viacom with a huge premium on it as well. So again, I wouldn't go heavily into any of these names during this market period, this next couple months, but I think you can kind of dip your toe in the water in a few spots to get a little exposure.
Okay, very good. Thank you very much, Gareth. That's been very, very informative again, and always a great chat with you.
Wonderful. Thanks so much for having me, Ben.
No worries, no worries. I hope that we can come back again, perhaps next week or the week after, and see where these meme stocks have got to.
Yeah, I'm curious myself. It should be fun to watch.
Yeah, let's just hope people don't lose too much money in the process.
Yeah.
All right, well, thank you very much, Gareth. Good luck for the rest of the day. I know you're going to be trading very heavily. So, thank you very much for your time.
Thank you so much, Ben. Have a great one.
You too. Take care.